Good evening, VV Nation. My name is Ryan. Welcome to the channel. Always a pleasure being your host here at VectorVest. We try to keep you on the right side of the market. That being said, all the talk about AI bubble, and at no surprise with Nvidia's earnings on the horizon tomorrow after the bell, I'm not surprised this talk coming to fruition. So tonight's presentation, I'm going to go over a few articles, but this market pullback, AI bubble or not, is something I've been talking about on the channel. Our proprietary market timing indicator, MTI, that looks at the underlying trend, has been keeping us on the right side of the market. And just as a pro tip, you're going to want to stick around because the MTI paired with our market timing signals can present some great opportunities on the horizon. That's right, a potential Santa rally. I've been talking about the potential for a Santa rally, and with this market pullback over the last few weeks, I'm seeing our market timing indicators pointing to just this. Now, don't rush, have some patience, listen to the video as I put you on the right side of this market. Here's the interview that's garnishing a lot of attention today. Google CEO, you can see stated here, every company would be affected if the AI bubble were to burst. The head of Google's parent firm Alphabet, that was his remarks in the interview with BBC. Also stating, while the growth for artificial intelligence investment has been an extraordinary moment, there has been some irrationality in the current AI boom. Now, with the market pulling back, we are getting some sentiments from Wall Street's heavyweights. As I scroll down here, Morgan Stanley CEO sees a 10 to 15% equity markets drawdown, while analysts and investors debate whether markets are even in a bubble. This I thought was a very interesting article. You can see the headline right there, the AI bubble you haven't heard about. As I scroll down, let's dive into this here. The electricity forecast that they're using to make their case have an inflation problem, and consumers could end up paying for power plants that may never need. The reason why? Many utilities are citing sky-high estimates to justify new AI data centers. The catch? Data center operations submit electricity requests in multiple jurisdictions, hoping that one might pan out. You put a bunch of lines in the water to try to catch a fish, he said, and the data center developers are doing exactly the same thing. So the data center developers essentially putting out a lot of fishing lines, right, to get utility contracts. Well, once they get a utility contract, they would have to cancel the other bids that they made, right? So that could cause a potential bubble when it comes to energy supply due to AI data centers that may not have ever been made. I thought it was a very interesting article. Just wanted to put this on your radar going forward. Here's an article by Reuters going into Nvidia's earnings. Bubble or breakout? Nvidia's earnings put AI boom under the microscope. As you scroll down, just the key points here, Nvidia's earnings seen as a leading indicator of AI-linked spending. Company set to report Q3 sales up 56%, over $54 billion. Now, the commentary around AI chip demand and life cycle. Again, life cycle is the whole point. Michael Burry, the famous short guy from 2008, that's what started all this, at least in my opinion, right? When he started talking about this, 2 or 3 weeks ago, more and more people started coming into the list. And even earlier this week, famous hedge fund manager Peter Thiel, his company unloaded all of their Nvidia shares, only adding fuel to this potential AI bubble. But here at VectorVest, we stick to the trend of the market. As we notice here in the color guard, simple color coordinated system. You see green lights, market is rising, okay to buy. You see red lights, market is trending lower, not a good time to buy. Yellow, typically transitional period. As I scroll down here, going back to October 31st, our main market timing signal under the call column went down November 6th. In addition to that, you see yellow and red lights dominating the color guard now for several weeks. Only one green light here on November 12th with no follow through the next day. That's why we've been getting more defensive here at VectorVest. So to give you a better visual representation and to show you exactly what to get prepared for potentially being a Santa rally, I'm going to show you exactly how to utilize the software. This holiday season, kick off your investment journey on the right path. Join VectorVest today, just 99 cents cents gives you 30 days access to the world's most powerful investment software. Just go to vectorvest.com/YT to take advantage of the special offer. So right behind me, I've got the market timing graph. The candlesticks you see here represent the VVC, or VectorVest Composite. Essentially, it's over 9,000 stocks. It's a little over 9,800 actually. It's like combining the Qs, the S&P, the Dow Jones, the small caps, all that stuff into one. Looks at the broad market. Much better representation that we feel here at VectorVest, rather than looking at a smaller portion of the market. And down below we have our MTI along with the buy-sell ratio. Now the MTI historically gives a sense when the market's trying to find a bottom, and typically when it might be getting a little top heavy. I put the levels right here on the chart. Historically, the MTI gets around 0.6, and that's when the market can finally look for a bottom. We saw that here back at the beginning of the year. The MTI came just short. You can see the market starting to rally. However, that rally fizzled out until the MTI came down to this 0.6 level, and then it took a little bit for the market to find its bottom and finally recover. As well, the BSR down below, if I use our date line here, right here at the low, you can see the BSR is at 0.05, the MTI at 0.46. Now here at VectorVest, we like to say that once the MTI gets around 0.6, that's when you should get the shopping list ready. When the BSR gets around 0.2 or lower, that's when the market is really looking for a bottom. Now, we do call this bottom fishing, things of that nature. And we do have videos going in more detail into bottom fishing. Now, once these proprietary indicators got to these levels, as early as March 10th, we see the MTI was at 0.53, the buy-sell ratio at 0.2. However, the market was not done selling off, right? The market was still looking for a bottom. That's why I'm saying have some patience. Now, we couple this with some of our market timing signals. Now, our signals, they differ, whether you're more aggressive, more of a trader, or more of a longer term investor, maybe more conservative in nature, right? Now, the confirm call, this is going to be a more slower moving signal, right? You're going to get a lot of confirmation. This is more conservative investors. Now, me personally, I like the DEW. I'm a swing trader, right? You see the DEW got in right after the bottom as of April 23rd, getting you in a lot of room to run for the market. Currently, we are in a DEW down signal, so you would want to wait to get an up signal here and some confirmation in the market rather than just trying to catch a falling knife. Now, the most aggressive signal that we have will be the primary wave. This is very aggressive, typically used by very active traders. You see the primary wave on April 11th, 2025. You see the MTI clawing back, as well as the BSR climbing back to 0.9, MTI going back to 0.5. But just a heads up, this is the most aggressive signal there. So if you want more confirmation, I like middle of the road, the DEW signal. Otherwise, if you're more conservative, you can always take a look at the confirm call. Now, as far as valuation and seeing if we're in an AI bubble, I can see pockets of overvaluation here, but just looking at this, I've got 15 of some of the biggest AI companies out there. The ones I've highlighted, these stocks are undervalued. If we take a look, value divided by price here, simply price action divided by value, any number greater than one, that stock is undervalued by the VectorVest metrics. On that list, we got Micron, TSM, Nvidia, Meta Platforms, and Twilio. Now, as far as some pockets of overvalued stocks here, we've got AMD, especially since the ChatGPT OpenAI deal. The stock went over 200, a little bit of overvaluation there. We've got 179. ASML overvalued, only valued at 729. Broadcom and Microsoft both stretched here from our valuations. Now, as we go further down the list here, we've got Palo Alto and some more of the speculative plays here, Palantir, UPath, ARM Holdings, Big Bear AI, CoreWeave, all overvalued positions. Now, as I look at the watch list average here, the price on average is $276, the value $231. So you can see these stocks collectively are somewhat overvalued. In regards to the article from Morgan Stanley, seeing another potentially 10 to 15% pullback, I could see that putting us right near our valuation. Really, again, all I'm seeing is a nice, healthy pullback that the market needs so we can potentially get some up signals and a proprietary market timing signals, and a Santa rally can occur. And when that does, I will definitely put out the video and put you on the right side of the market. Now, if you enjoyed tonight's presentation, hit the like button. If you're new and found it informative, hit the subscribe button. I'll see you guys tomorrow evening.